I want to continue to go through some of these numbers that we got from the National Ag Statistics Service and USDA when it comes to our crop progress, our planting progress numbers that were out yesterday afternoon late. The grain sorghum planting, or milo, and this goes back to what Jeff was talking about with that dry weather in western Texas. 65% of the crop is now in the ground, and that is right in line with the 5-year average. Last week was only at 51, so they made a lot of progress. Oklahoma only has 1% of their grain sorghum planted. 5-year average is 9%. Didn't have anything last week. In Kansas, Nebraska, or Kansas and Colorado, nothing planted there yet. Nebraska doesn't have any milo planted yet. Their average is only 1%, though. Cotton planting this time around. Texas says 17% of their cotton is now planted. Georgia has 7%, Mississippi with 2%, Alabama with 5%, and North Carolina, 1% of the cotton is now in the ground. Let's go to the corn market, and with these futures provided by Bar Chart. Now we've got this front month here of the July up 3.5 at 661. December is down 1.5 at 566 3/4. So here we go, going into the last part of the trade. And by the way, we mentioned in our last last break here that we were talking about being just a few pennies away from possibly making an outside or a reversal downward. So we'll see what happens here. With July soybeans down 13.5 at 1525 3/4. November up 11 1/4 at 1350 3/4. Now on to the wheat market. Chicago wheat. It's July up 3 cents at 742.5. So this market turned around from being lower earlier. Kansas City wheat up 7.5, 716 1/4. Minneapolis wheat for July right now is up 1 1/4 at 750 1/4. And the cotton market for December up 2 pennies at 86.95. Ted Seifried, Zaner Ag Hedge, joins us. What a day this has been. How would you describe today's market moves, Ted?
Yeah, what a wild day. And listen, we've touched the limit up 3 of the last 4 trading sessions in corn. So it continues to be really, really wild. We've reversed off the highs, but the May contract staying very, very strong as we get ready to go into delivery day. So that's suggesting a short squeeze, but that short squeeze has been coming before the first notice day. And so what does that mean going into delivery? The market's suggesting that the short squeeze can get really very wild, but I wonder if it's a bit of a trap. I'm so very curious to see what happens with that May corn contract here over the course of the next week. In the meantime, yes, all the strength that we saw in the night session has really faded away in the soybeans and anything beyond the July corn contract. And this sort of volatility a lot of times is saying that maybe we're coming to a near-term high. Maybe we're getting ready to see a bit more of a correction. You look at all the planting progress that's going on right now, dust is a-flying. You would think now would be maybe the time to see a bit of a correction. But those old crop corn contracts seemingly want to hang on right now just because of all the issues that are going on down in Brazil.
Yep, and that's been talked a lot about. And it's going to be interesting to see what we see in this next week's crop progress report because like you well pointed out, there's a lot of people in the field right now and a lot of planting is taking place and it can happen in a hurry. We'll be back in a moment. Stay with us. More with Ted Seifried right after this. Let's go to the futures first in the livestock trade, and the live cattle market for April is down 17, 118.32. If that catches you by surprise, it should, because this was the market that was higher. June down 27, August down 30. So yeah, all front 5 contracts have turned lower. And the feeder cattle market that was just kind of hanging in there right now. April up 130, but the May now down 117, now 120 on our instant quotes, 136.07, and the August is down 7. For the hogs, going into the final little bit of trade here today, pretty consistent from about an hour ago. May down 30, 108.95, June down 22, the July down 30. What gives over here in the live cattle, Ted? All of a sudden, looks like those fats just kind of give up the momentum that they had.
Yeah, and that's a bit disappointing, especially with most of the markets in corn being down. But, you look at May under pressure, May feeders in particular. Well, look at May corn, right? So there's a lot of strength going on there. We're worried about what's happening up front. But if you go further on down the curve of the feeder cattle, a little bit of a sigh of relief there because it is kind of looking a little bit toppy for some of those corn contracts. I would think that the feeder cattle have more room to the upside. But like you said, it's been a disappointing trading day here for the cattle complex as a whole. hoping to maybe regain some of that strength here just in the last few minutes, but not looking great.
Okay, let me ask you this then. We did see just a handful, small amount of 118 paid yesterday in the South. Did that leave a dark cloud over this market?
Yeah, a little bit, but we weren't really seeing that to start the day, but now we talk about it towards the end of the day when it starts to sell off a little bit. But it's not a big sliding cash. Yes, we want to see 120, 121, 122. We saw 119s last week, so 119 was a step back, but it was small and the week is early. I think there is room to see those prices go higher once again. Again, box beef price is really very good. Domestic demand is very solid. I think there's room for cash to move to the upside. And I'm pretty friendly cattle. This whole inflationary trade that we're seeing very much so in the grains, I think has spilled over to the livestock as well. But I think you're going to find that inflationary crowd looking to buy off the support here. And I see more upside potential.
Oh, that is a great point. Okay, so what about the hogs? Those cutouts, those were higher here at midday as well.
Yeah, right. I'm actually a little bit more bullish hog, simply because talking to people out in these major hog producing areas, it doesn't sound like there's as many animals out there as what most people are, or the USDA is saying, and so on and so forth. So I think, especially when we look into the late spring and early summer months, I'm really keying on that August contract. I think there is more upside potential. I think we'll go and make new highs sometime in the relatively near future. PRRS is a big problem.
Yep. All right. So what about these outside markets? Are they a player at this point at all?
Yeah, absolutely. I mean, look at the US dollar, for example. I mean, that is a big one. That is, a lot of people don't want to look at the US dollar because it's a basket that's based on Japan and Europe mostly. And when we talk about grain business, that's not usually who's buying much of our grain. But from an inflationary standpoint, the weakness in the dollar mean that commodities as a whole should be worth more. And we've seen that really become a big factor in the market here over the past few months. And if you're hearing all of these earnings calls, the word inflation is just mentioned time after time after time after time. Your big end users are worried about inflation, which is why you're getting this buying happening in the raw commodities, corn, grains, but copper, lumber, all of these things, so very strong. That will continue to be a factor for the commodities market for some time to come.
All right, Ted, talk to you tonight on the Real Evening News. Have a good afternoon. Back to you, Janet.